Good morning, friends and fellow traders. It's Friday. Yay. After this market sell-off, Friday sounds pretty good about right now, doesn't it? It is February 9th, 2018, and this is Doug Campbell with Right Way Options coming to you with the morning market preparation video. So, my goodness. Yesterday, I talked a lot about the potential of a blue ice failure, that we needed to respect that, we needed to pay attention to that, and I suggested extreme caution. Unfortunately, the market did slip off that tightrope there and plunged into the water. So, let's see. We have a key support level right in here, somewhere between right here and right here. This is going to be very, very important that we hold this level. And I just placed that mark there just because that's kind of where we stopped the last time. That would be a test of the low. We could easily slip down below here. We are officially in a downtrend and officially in a correction zone on the market. And that is obviously very painful, with the Dow having fallen 1,032 points yesterday. Hopefully everyone was either standing on the sideline or prepared for that. This morning, we're watching futures just bounce all over the place. We've been up over 100 points. We've been down. Currently, at this very moment, they are suggesting about a 50-point drop in the market. And that's unfortunate because we had, yesterday we had a round of beautiful earnings, great earnings reports, but they're not going to do much today because, and help the market much today because of the, bearishness that we're seeing in the market. We're just getting all kinds of back and forth, and it's being very punishing. To a lot of folks. So be really, really careful here, guys. It's Friday. There's really no need to trade this today. Just let it happen. Do what it's got to do. And, come back next week. We'll see if it starts to settle down and things are good. If we take a look at the VIX is very high. We're up here in the mid-30s, which means, the propensity for very, very fast price action, very quick reversals, really makes it impossible for swing traders to have any edge at all. It's just an unwise place to be playing. And so for me, I'm just pretty comfortable sitting on the sidelines for the most part, not worried about this really much at all because of where I stand in the market. That's a comfortable place to be right now. I understand many of you probably are looking at losses. All right, we're now down 100 points just that quickly. We slipped 50 points in the market. There's no edge here to be had, and trying to mess around in here is just going to add more misery to a losing account. So stand aside. Let the market sort this out. And this is the realm of very fast day traders and big institutions. Other than that, we need to just kind of stand aside, let it happen. We'll find our way back in once it settles down. Just know that this won't resolve itself quickly. Very good chance this could take weeks, if not months, for this to straighten up and some of this volatility to go away. Let's take a quick look at the SPY. And actually, I want to take a little bit of a closer look at the SPY. You can see the diamonds held that support yesterday. The SPY actually gave it up here at the close. And here's probably the reason why. If we take a look at moving averages, we are very, very close now to the 200-day moving average on the SPY. And I think it would be very likely that the SPY is going to test that 200-day moving average in the very near future, if not today. So watch that closely. Now, if we go back take a look at the diamonds, that would be a heck of a drop. That's going to be like 1,100 points down in the Dow for us to reach there. Hopefully that doesn't occur. And the Qs would have to take also a pretty substantial move lower to reach that 200-day. But notice that the Qs also gave up this low of Monday, okay? Or this week, the low of this week, not Monday, the low of this week. So clearly not a good sign for the market. And those next levels of support could easily be tested. So consider that when you're planning your day, because we could see some strong selling come in here, just by virtue of the fact that that 200-day moving average on the SPY is going to pull really, really hard on this average, so or on this price. So kind of keep that in mind. IWM back down here testing that 200-day moving average. High probability it fails the 200-day, and we drop below and come back and seek, you know, a level down in here, a stronger level of support down in this area. Right now, I would suggest maybe right in here would be one of the stronger levels of price support, and we could sink down into here pretty easily. So, you know, as nasty as that sounds, the world's not coming to an end. If we look at the charts on a longer term, you can see we've been rallying for a very long time, and this pullback here is just a blip in the longer term chart. Is it dramatic? Is it painful? It sure is. The world is. But it will resolve itself here eventually, and we'll be back to better trading. Whether it's in a direction of going up or going down, it really doesn't matter. We just need it to calm down here a little bit so we have some edge to trade. We're now down 130 points in the Dow. So that's how fast this market is moving. Please be very careful and really consider whether or not you want to be in this market at all. I mean, it's Friday, you know, we're traders. We have the ability to take the day off and it doesn't hurt us. Take the day off. Go do something else. Don't sit here and watch this and get emotional about it. Well, as a matter of fact, I'm gonna say don't take the day off until after lunch. Okay, at noon today, in Hit Run Candlesticks room 1, we are going to be unveiling to members, to all members, Trader Vision 2020. So Ed will be there at 12 o'clock Eastern today to unveil that. Right Way Options, we're going to cut that an hour short today as a result. So everyone plan to attend there if you can. Let's look at T21. Whoop. T21.22. The T21.22 is the 4-week new high, new low ratio. And you can see we are definitely down here in the bearish reversal zone. We've carried this thing really far and really deep. We really should technically be seeing some kind of a relief rally or a bounce here. But that doesn't have to be the case. Remember, we can certainly extend this pain. And with the 200-day moving average on the SPY so close, I think there's a high probability that we do. Now, we may not do it today. We could get a bounce today. We could, you know, anything can happen. But just be careful. Don't be looking to buy up a bunch of stuff right now. Wait for the market to settle down. Wait for cooler heads to prevail. Buy signals will come back, and we can trade. Let's preserve the capital that we've put into the account here the first month of the year. Let's preserve that, and let's wait for a better time to trade. All right, guys, with that, I am going to call it a Friday, and I want to wish everyone a fantastic day, a wonderful weekend. You know, the market stinks. We know that. you know, nothing that we do here is going to change how this market is going to react today. So just be careful, all right? And you know, enjoy your weekend. Don't let this you know, ruin a perfectly good weekend. Enjoy your family, and there's more important things than this, and this will come back around. It will return. Always has, always will, and we just have to wait for that. So with that, have a wonderful weekend, everyone. Be safe, be careful. See you right back here bright and early Monday morning.